Hi, I'm David Stein of Money for the Rest of Us. And in this video, I share the most important investment advice that I know. Prior to starting Money for the Rest of Us, I was an institutional money manager. I managed over $2 billion in assets, and I learned wisdom from a lot of other investors, as well as the day-to-day experience of managing money. Here's one of the most important principles I learned from Nassim Nicholas Taleb. He's known for writing The Black Swan, Skin in the Game, Anti-Fragile, and other books. Here's what he says. I have effectively organized my life around the point that sequence matters, and the presence of ruin disqualifies cost-benefit analysis. What does that mean? Sequence matters. Well, sequence is the pattern of returns that we experience. And what he's saying is, if that pattern of returns can lead to ruin, where we lose all our money, then it doesn't really matter. That disqualifies any other decision. Now, let's take a look at this sequence of return. If you had $100,000 and you gained 100%, you'd have $200,000. And then if you lost 50%, you'd be back to $100,000. But if you first lost 50% and took your $100,000 down to $50,000 and gained 100%, then you'd have $100,000 again. So in that case, that sequence of return doesn't matter. But if you actually started out with $100,000 and lost 100%, then you're ruined. Even if you earned 50% on top of that, it doesn't matter. And so that pattern, the potential for ruin, and when ruin, what we're looking at is, what is the potential harm, the personal financial harm that can be caused by losses? There's an influential paper by Ole Peters and Murray Gell-Mann, and they talk about how we pass through time and we invest through time. And they point out that if we bet the house and we lose the house, we can't bet our house again. And so our experiences in the past, in terms of our investments, how much money we've lost or gained, influence the decisions we make in the future. Now, returning back to Taleb, what he says is, rather than spend our time trying to get better at predicting the future, it's better to modify our exposure to bad things that could happen. And that's important. When we're investing, we need to always be mindful. We're risk managers. Yes, we want to make money investing, but we also want to make sure that we're not going to get ruined by putting, for example, all of our money in one particular opportunity, be it Bitcoin, gold, or an individual stock. That's why we talk about diversification. Not that there's a right portfolio, but that's all about making sure that we're cognizant of our exposure and the potential impact of bad things that could happen. The other thing we want to do as investors is to make sure that our returns, our profits, are not dependent on being precisely right. It's hard to invest where you have to be absolutely right about your decision. Because if you're precisely wrong, then you could suffer big losses. We want to invest in a way that we don't have to be precisely right, that there are other drivers to the portfolio or to that particular investment, such as income, the dividends, the rent, that we don't have to be precisely right about where the price is going. So when it comes to the most important thing about investing, it's important to recognize that sequence matters, the pattern of returns, and particularly to make sure that we have modified our exposure so that we're not going to get ruined by any particular investment decision, that we live to invest another day. Hey, if you have any questions on this video, go ahead and leave those in the comments below, and please subscribe to my channel. Thanks.